Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark price for feed wheat is £175, up £2 from last week. Last week's US WASDE report indicated a worsening global abundance of wheat in 2025-26, an expansion of global wheat supply to 1,103.2 million tonnes, combining with a contraction of global demand to 820.1 million tonnes. India, in particular, shows a reduction of projected demand by nearly 5 million tonnes between March and April. This heavy supply picture is being compounded by Russia, as the government recently added 5 million tonnes to its export quota for wheat, meslin, barley and corn on the back of sufficient domestic supply. The London feed wheat May contract started the week climbing nearly £3 to £175.95 after a disappointing end to last week. Modest gains continued as the contract closed Thursday at £178.65. Meanwhile, the gap between the May and November contracts has shrunk from over £11 at the end of March to just £3.75 on Wednesday. The Midlands benchmark for milling wheat is £187, up £7 from last week. Concern for this year's US hard red winter wheat crop continues due to drought across the southern plains. The USDA's latest crop progress report revealed good to excellent ratings for winter wheat, dropping to just 32% in Kansas, 15% in Texas, 14% in Nebraska, and 10% in Oklahoma. Meanwhile, Indonesia is now the world's top wheat importer for the season at 13.2 million tonnes due to rising demand from the country's expanding flour milling industry. Paris milling wheat prices have drifted following last week's sharp decline, the May contract inching up to €195.75 on Monday before dropping away to €194.25 by Wednesday's close. Thursday's trading saw the contract settle at €194. On Hectare Trading, some farmers have been locking in prices on their new crop. We've seen forward selling of new crop Group 3 wheat for November movement in the West Midlands and Group 4 hard wheat in the East Midlands. The Hectare Trading Midlands benchmark for feed barley is £161, down £1 from last week. Australia shipped 1.5 million tonnes in February, with the feed component rising 11% over January to 1.13 million tonnes. China was the primary destination, absorbing over 900,000 tonnes of feed barley and 323,000 tonnes of malting barley. Meanwhile, the UK malting barley market remains weak due to a lack of interest from brewers and maltsters, while in contrast the livestock sector is increasing demand for feed barley. The Midlands benchmark for OSR is £441, up £13 from last week. Soybeans continue to drive prices in the global oilseed complex. Brazil raised its soybean harvest estimate to a record 179.2 million tonnes, which will likely lead to market saturation between May and July. However, China has announced a 3.1% drop in its soybean imports year-on-year from January to March, amid stricter quality inspections on Brazilian cargoes. Canada's rapeseed export program is struggling, with cumulative shipments at 5.6 million tonnes compared to 7.2 million tonnes at the same point last year. Meanwhile, Ukraine is projecting a large expansion in rapeseed production for 2026-27, rising 25% to 4 million tonnes at the expense of soybeans. After dipping back to €500 on Tuesday, the Paris rapeseed May contract surged over €9 to close Wednesday at €509.25. Another strong day saw the contract end Thursday at €516.75. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.